What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button if you are new and hit the thumbs up button. Hope you're doing great. TGIF, domination. Beautiful day today. Ready to rock. We're going to talk a little bit about price, market, surprise, and then talk about a few pieces of news that I thought were pretty interesting and good takeaways that we can go into the weekend with, and overall kind of thoughts that we can lead into this beautiful month of June. Summertime, living's easy, sort of, in crypto. Anyway, let's get into it. Now, yesterday we were talking about Bitcoin, and what was happening yesterday is I'm going to go into the 1 hour. Right, we're on BitMEX this week, mostly for the liquidity. And when we loaded up the 200-day exponential moving average on the hourly on this chart, you can see that we were really finding some support. We were getting some strength as the video ended, and then it came down, and then we had a huge drop, which was not necessarily unsurprising because we kind of have this, higher low situation going on, at least if you want to call this the bottom. If you click on the volume button, you can see that the volume on that drop wasn't necessarily huge, so it probably wasn't a massive reversal, and then we got back above this line and then dropped down in a big way. Now, overall, this is showing us a few things. And honestly, when it comes to crypto and looking at these charts, sometimes looking at the historical reference points, almost like a fractal, is the most effective and helpful way to do this, at least for the last month and a half, 2 months or so, because we've just seen this same, the Bart Simpson pattern over and over, and it's starting to show some trends, patterns, if you will. And one of the patterns that it has shown in recent past is that when you start to get these higher lows, you start to build a trend line, which originally, this isn't going to be completely accurate right now, but you can make a case for, going off this low to something like that low right around, 3 p.m. If you're on the podcast, I know that this is frustrating on people to hear exactly, but it's hard to describe what I'm doing. I'm drawing an upwards diagonal line that connects certain points on the chart. Now, there's no scientific system to this. Sometimes it's just ballparking it to see if I can see a trend in the chart, because often this sort of algorithmic buying, which is really what's going on here in many ways, is built on some sort of mean reversion, meaning that it has a trend that it's trying to hit or an expected return that it's trying to hit. And it will move all around that, but eventually it comes back to what that mean is. So if it spends a lot of time above the mean, it's going to drop below it, but then it's going to eventually come back up. That's kind of the same idea behind something like an RSI or any of these oscillator indicators. And so I find that it can be helpful in this particular market at this particular time to try to find what the mean is for the algorithmic buying. And then you'll start to see that a lot of things match up. Now, this is just another way to look at price. I mean, it's the same thing as looking at like a Fibonacci retracement or even moving averages. It's just less of an official way to do it. I'm not saying that it's always going to be right or perfect. It is just, I think that it's always good to just verify or at least test your assumptions. Anyway, what does that mean? Well, it means that we are getting these higher lows, and this big drop that happened this morning is a little bit concerning. But if we can continue to get one more big surge in the positive, one more big price movement like we've been getting, we get a third one, that's going to be a good sign, at least to get to this top of this triangle, right? If we get if the next big move is a Bart Simpson pattern and then a big dump, that is not as good of a sign, because then we're looking at a fourth or fifth test of this trend line. That's when it just gets, usually harder and harder to hold that support over the long term. So we're really getting to a critical moment. What happened yesterday with the trading? Obviously, using this support, I was bullish. I closed the video. It was just a timing thing. I came back and this dip had happened. and I saw the support happening, bought a little bit, had a very, very tight stop loss, and then it started to look a little shady right around 7,500, and I sold right before this big pump, and then it dumped again. So the good news is I didn't lose any money. The bad news is I didn't really make anything either because it kind of reset itself. But this was a very high risk situation to begin with. I think the same thing is true right now. I think the best case scenario is we get another big pump and we really start to move up. I think the volume is important, but I also think that, like we talked about the other day, in speculative markets, high volume is actually what you want to see for the lowest lows. You really want to see lower volume as things move up, because that means you're getting more and more buying activity, more and more holders. If you want more volume to drive the price up, that typically means that it's not going to last very long. So I look at volume on these charts on like the 4 hour for Bitcoin. I look at it to see reversal signals. I do not look at it to see in terms of price moving up. If I see a ton of volume and this price moving way up, I'm probably going to scalp anything I can because it's not going to last. You want low volume and price moving up for it to be a sustainable long-term trend, which we're kind of seeing right now, but we just need more time. So bottom line, I'm really probably not going to do anything for definitely for another day, maybe even the weekend. Just sit back and watch and see if we can really start to get a solid trend and get out of this kind of danger zone area, which would be really above 8,100. That's when it would start to be a little bit, there's a lot more potential. You can make a case for having these moving averages start to cross each other, but we'll go from there. All right. So not a lot of crazy moves, but it's so it goes. Now, the two other ones we talked about yesterday. First one was Tron, which kind of had a weird thing go on all day. If we just open up Tron here, and we're on the 1 hour. It had like a weird kind of pump yesterday. It was kind of messing around at this support level, which was, 790 Satoshis or whatever it may be. It popped up. It had a bit of a quick pump, but then it just dumped all the way down. So I started right after the video, I started buying a little bit to get in. As it rose above it, I set my stop market order right above my entry price so that even if it goes down, I break even with fees included. It went up. I didn't do anything because, it wasn't a very big move, relatively speaking, a couple percentage points. Then it immediately came back down, got stopped out right at the break even point. I didn't lose any money, but again, it didn't really make it a big enough move for anything to really happen. The other coin that we were looking at yesterday was Binance, which did have a very good kind of secondary news cycle. And so now we're looking at this, and you can see looking at the chart, for anyone listening on the podcast, we really got 1, 2, 3, 4 points that it's really trying to break through this level. I guess the first one, which happened in January, it's already been broken, but we got this high from early April. We've got a high from mid-May, and we've got a high from yesterday/today. This cup and handle, it's really trying to break through, even with this big bar. So I got some Binance coin yesterday, and I think that's one that may have some more legs because it had this. The news came out that was originally a rumor that we mentioned on the video. That the news article came out later in the day. This isn't it. This is about Huobi. Where's the one about? Let's see. Binance releases their $1 billion fund. Where is it? Well, I swear I had this article up. But anyway, you guys, if you didn't read that article, you can go check it out. Binance released a $1 billion fund. They're actually going to use BNB tokens to fund things. They're going to use it to fund projects. They're partnering with Republic. They're doing a lot of things around that. Drove a lot of the news. Anyway, this is a very solid looking chart in my opinion, pending the rest of the market doesn't completely collapse. So overall, happy with that choice. But again, everything is very tenuous. We are on a bit of a cliff. Let me refresh coin market cap a little bit here. $330 billion market cap. Switch over to BTC. And looking at the overall sentiment of the market, I don't know. I'm optimistic, but I'm also realistic in many ways. So I'm going to just wait and see. I don't care if I miss a 10% move. I'd rather get out of this area, get up to 8,000, 8,100, and then get serious about going long. Other thing that I saw, Mary Meeker every year does this rate internet report. I think she works for Kleiner Perkins, I should say. And if you want, I'll link this up. It's every year she does this PDF. It's this epic, 300 pages, and it's kind of like the state of the internet. And I want to just, this is an interesting indictment on the news and the media, which I would say the last year has gotten a lot of heat, a lot of whatever, for good reasons, kind of clickbaity. The title, which is in Cointelegraph, the title is Mary Meeker's 2000 Internet Trends Report shows interest in crypto, quote, exploding, right? So you would see this and be like, oh my gosh, this amazing internet report is talking about how big crypto is getting. But then you read in through the article, and in reality, there was only like one slide on this. So if I do crypto, so I'm just doing a control F in the PDF, which is 294 pages. So the only place that the word crypto shows up or cryptocurrency or anything is on slide 233, where it talks about the top courses. I want to say this was at Princeton, if I read that article correctly. But anyway, the top course, Princeton right here, was Bitcoin and cryptocurrency technology. All right. Then you type in Bitcoin. Same thing. It only shows up one time on that same slide for the top currency. The only other place that this stuff shows up is on slide 20, when it shows that Coinbase's users are exploding or moving up exponentially. But this data stops at the end of 2017, which is right at the top of the bubble. So you look at this news article, and then you look at the actual primary source, which is where you always want to go to verify it yourself. And it makes you wonder how much news, how many headlines, how many things are you reading that are missing what the point or the greater picture of what's really going on. And this goes both ways, where something may be downplayed, where it's actually a huge deal, versus something may be very bullish and it may actually just not be a thing at all. And the reason why I want to bring this up is because when we are in a market like this, go to XBT. So when we're down here, where we are at Bitcoin, right? We're down at the bottom of this triangle. We're really at a kind of a point of uncertainty. This is when people are just, they want to do something with their coins. Often they sell them. Sometimes they buy them. They're just like hungry for information, for guidance, for certainty. And that is when a lot of these clicky articles can start, it can just take people down paths because of confirmation bias. And the whole point of these videos is to help people make better decisions. None of this professional advice, not an advisor, blah, blah, blah. But this is just such a critical moment, because we are going to see some price action. The Bitcoin Volatility Index is telling us, it's shouting at us that we are going to see something go down in the next month or two. We don't know if it's going to be up or down, but there's going to be some serious price action. And the doldrums is where you get eaten alive. And these kind of articles, they're all over the place, because these guys need to keep making ad dollars. So they're going to make up, or they're going to move you into the place that, whatever you want to call it, they're going to try to get you to click on however they can. So last thing I want to talk about is EOS. I believe they go live today with their mainnet. And it's funny, whenever I talk about a coin, I think some people often think that I'm like promoting the coin or I'm bullish on the coin. That's not always the case. In fact, it's usually not the case. I'm usually not bullish on most stuff. And so with EOS, I'm not saying that EOS is the future or a winner or anything like that. I'm saying that the main net is going live. And I think that you look at the bigger picture of what's going on with EOS. There's a lot of people that hate EOS. They hate how centralized it is with the 21 super nodes or whatever you want to call it. They don't like that the developer has developed multiple cryptos before that have kind of, not had a great reputation. BitShares and a few other things that just kind of didn't really go anywhere because Larimer just moved on. I'm not saying I agree with that. I'm just saying that's what people think. And the other piece is that EOS kind of has this, they have so much money. It's almost like a blend of people that love Ethereum and people that love Ripple kind of love EOS, right? It kind of fills that void where it's centralized, but it still has the vision of what crypto could be, which is kind of a weird paradox. And so I think as the mainnet goes live, I think obviously you can look at the tech side, which is how does the throughput work? Because if EOS, from a tech standpoint, in my opinion, has two things that need to happen. One is it needs to prove that it's not too centralized for security reasons and really from an incentive standpoint. And two, it needs to be able to dramatically scale its transactions per second. When it launches, I believe it's only going to do like a couple hundred, which is basically what Ethereum does. Or Ethereum's not even there yet. They're like 10 or 20. But EOS eventually said they're going to scale to a couple thousand the transactions per second, maybe even like a couple 100,000 transactions per second. It's just going to take a little while to scale out. So that's what it needs to do on the tech side. It needs to prove that out so they can build on top of it, build successful dApps, and actually show a Ethereum on steroids, which is what EOS is. So that's the tech. Tech can drive some price to a certain extent. It's more of a long-term proxy for price. That's one piece of the success of the company. It's a big piece. The other side of the coin, which is what I'm more interested in the short term, is the price action. And typically with price action in cryptocurrency markets, it comes down to how much the founders and the people at the top of these coins, how much are they focused on making money, or how much are they focused on the price of their token increasing? And there's a very, very strong case that the people who work at EOS, people who founded EOS, people DNA, Block One, everyone associated with EOS wants EOS to go big. They want it to be $100 coin. And they have a huge war chest to make that happen. So I think that, to me, that is the interesting story. I think the tech will work is what it is, and that's what a lot of people try to focus on. This real story is, how are they going to deploy their money? How are they going to bring in more talent? How are they going to market this thing? How are they going to sell this to people, to exchanges, to the greater public, to ETFs, to everything? How does that play out? Because when you look at price of the EOS token, that's where the big money is going to come. I think the other thing to think about is this is the first time in a while we've seen a big coin move exclusively to a main net, right? Their own blockchain. Cardano was kind of ish the last one, but we got this one, and Tron's probably going to be the next one after that. And this is going to be an interesting kind of market split as we watch these move themselves out. So watch EOS. I'm not saying buy EOS by any means. Who knows what's going to happen? It could go big, but you really want to pay attention to how are the people who are heavily invested in EOS, what are they doing to make this thing go up from a marketing and monetization standpoint? How do they sell this? And if they do that really well, that's a very good precedent for something like Tron, which is going to come next. And that guy Justin's going to just hammer that thing from a marketing standpoint. So I think this is going to be super, super interesting for this space. Definitely a wait and see situation for me, as is pretty much everything in crypto right now. But I do think that there's always something to be watching and learning as we watch this market evolves. Super, super fascinated with that over the next, couple of months. So that's where we stand. I don't know. I think it's really just waiting to see what Bitcoin's next big move is, any sort of big macro news that comes in. But what's interesting also is that as we get to the end of this triangle, even if we go sideways, eventually we're going to get to a point where it has to move one way or another. The market or the chart is going to dictate that, like, the price is squeezing itself enough that it has to pick a direction. It can't just keep bouncing up and down forever. So one way or another, we're going to get there. And be prepared. As always, be ready. That's the name of the game. That's how you make the big money, is just being ready, and the opportunity will present itself. All right, guys. Well, it's been a great week. I think we're going to have another full week next week. And with that, I hope you have a great weekend. I'll catch you later. Peace out.